This is Morning Stock Watch with the weekly market reports for the week ending August 21st, 2020. This report includes the broad market sectors, along with Tesla and Netflix. Starting with the S&P 500 ETF, SPY, with the weekly closing price of $339.48, up 0.5% since last week's close. This is the weekly chart of SPY. The market has been in recovery mode since the lows of March 23rd. It's taken just 27 weeks to recover the losses from the pandemic and make all-time highs. This week our candle closes a green hammer with moderate volume, lower volume than last week. Since this week has made all-time highs, resistance at the previous all-time highs has been broken. With low volume on the week, even as a hammer, we're likely to see more upside next week. We do still have the possibility of downside with the divergences here, but honestly, it looks more favorable for more upside, just for the simple fact that price devoured losses pretty quickly, 27 weeks. Normally, that would take at least a year to recover those losses. Again, the appropriate low volume for the green hammer on the week shows that price may continue a good amount above 340. On the daily chart, we see price continues to remain in an up channel, as we see here. It makes lots of contact with support and resistance over the past 22 weeks. This proves to be a very strong channel, with many traders watching support to give way. In this big channel, we have two channels, like so, with price hovering near the support line. All this week, price has made very little moves, staying within the support and resistance of this little standalone area right here. Support is around 335, with a couple instances of negative divergence. One large one here and a small one right here. If those were to play out, that could bring price back below both supports and stimulate selling to the downside. Looking closer at the past week on a daily chart, looking at the volume and price, we have a lot of consecutive dojis spinning tops at the top of a trend along Thursday's open below support and the green conversion line, but close back into the channel, with Friday opening and closing inside the channel, but with higher volume and a narrow spread. The higher volume to the slim candle can be a sign of weakness. Now let's look at the 11 market sector ETFs. This week we saw the market led by tech, up 3.5%, followed by consumer discretionary ETF, up 1.8%. The NASDAQ continues to make higher numbers as each week passes, it seems. Last week we had a high volume doji, this week a good run up, but on weak volume. Interested to see how much further this goes up. Utilities, industrials, and energy lately are usual suspects underperforming the market during the COVID crisis. Energy down 5.5% this week, holding support at 35, Chevron and ExxonMobil mostly, in this weakened economy. Now let's look a bit closer at the S&P. The same as last week. From what we know so far, we see that the SPY, the market can easily continue higher or lower from its current position. It is in a really tight spot at 339.48, just below 340. As said earlier, since we're not seeing the high volume on these topping candles, we could continue to see some higher prices despite the divergences. Right now, an upper price target of 340 remains. Above that is 342.50, 345, etc. As the price is now at all-time highs, there are no areas of previous price resistance to get through. 350 would seem like a reasonable upside price target with the given trend now. Next we have is Tesla, weekly close of $2,049.98, up over 24% since last week's close. Tesla is a very controversial stock. It's one that has gone to the moon and back at least 3 times, and a ton of experts would tell you not to hold it. But look where it is now. Among other things, there's a 5-to-1 stock split on Tesla at the end of the month, which is fueling a lot of the volume recently. This is where once the split occurs, for those holding the stock, their shares will increase by 5, but each share will be 1/5 of the original stock. For example, if a person owns 1 share of $100 stock, a 4-to-1 stock split would give that person 4 shares at $25 of that stock. This week, Tesla is up another 24%. This is what we figured, something like that near $2,000. Reason was strong buying volume on last week off the conversion line, and it closed well above the up channel. There was some slight bearish divergence emerging, but that was erased for the time being this week. This week we had a strong green candle with a medium-sized upper wick, which is bullish, but let's look a little closer at that upper wick. Going to the daily chart, we have an up channel with the resistance created back at the February highs. Lots of contact with these levels to prove that these are very important areas. We have a high volume inverted hammer and negative divergence at 2100. So there's a few hints that price could come down, and to what? Let's just look at some obvious areas of support like around 1830 and 1630. Right now I don't think it'd go that low based on what's happening with the stock. We could even have some sideways volatility, but those are the strong support areas, 1830, 1630. The possibility of price breaking to the upside into a new trading zone is also possible. And we also have Netflix today, weekly close of 492.31, up 1.73% since last week's close. This large wedge is still reaching to about 580. It's possible that price can continue to push up while remaining underneath the wedge, making it back up to 580 to have a large correction. Take the largest part of this wedge and add it to the tip of the wedge. That can sometimes give you a ballpark of the correction once it reaches that area. That corrected price is around exactly where price is now, somewhere around 480. As we can already see, there's a lot of price action building up here at 480. That would be the new critical number for Netflix. This week on Netflix, price is inside of a descending wedge type pattern, and those are normally bullish, especially if there's some kind of bullish divergence. These two bottoms, when compared to the MACD indicator, shows some bullish divergence, but we need to see it break through and hold support above the trend resistance of the wedge. Continued downside for Netflix should be watched around 450, 415, and 400, with as low as 385. Anything below 450 would be a definite buy for Netflix based on its fundamentals and outlook. If you found this report useful in any way, please be sure to like, share, and subscribe. Thanks for watching, and hope to see you again next week for another weekly report.